Point is though, is that what happened here is we crashed down below the support range for the first segment, as we have done here, and then we came back up to the very top of this third segment. We came up to the very top of the middle part, to the exact middle part. Look at that, that's the very top of this, to the very bottom of the middle, and this sort of, it's weird too, again, just that it does that. It does this for the first segment specifically throughout all of these things. But anyways, to the very bottom of the middle part there. So as far as for ideas, again, none of this is necessitated, but as far as ideas, because we get good news, things could change. And we've kind of seen that before too, where it's following the narrative, and then on a one-day basis, it's sort of like a change of mind, and something happens, and I can, I'm going to tell you exactly what I mean by that. I can show you. Anyway, so for ideas right now, and again, not a recommendation, but for ideas right now about how to approach the situation of this crash that is occurring and maximize gains at the same time. It looks as though, again, we are following history here. It looks as though what we may very well follow as far as the strategy is being recycled is the same thing that we saw before, and to the bottom here of this middle part for that first segment, that first part right there, which would be right here. So as far as ideas then of splitting up funds, and we've talked about this before, so let's say, for example, let's do a hypothetical, that you have $100, right? And we want to say 2 weeks has 10 days, because from a business week, this is when the market is open. The market isn't open on the weekend. Crypto is, but that's different. You've got 10 days then over 2 weeks in order to split up your money. We would say best, so to speak, best ideas. Just want to make sure this is actually still recording. Last time it all fudged up for some dumb reason. All right. We want to say then that $10 every single day over the next 10 days, 2 weeks, right, would be an appropriate allocation of funds. Putting your money, what would make sense to your brain and wallet. If this starts cracking above this sort of like this support level for the bottom here, which is possible, but it could go here, it could go there. Nothing, we're talking about likelihoods here, just based off what has happened before. But the beauty of the reason why we want to split it up over 2 weeks, maybe 1 to 2 weeks, is because if something does go strange and it doesn't go with what is most likely, so to speak, and things change, you are still getting the best of possibility, so to speak, because it's just as a consistent lesson. You want to talk about a theme of learning through stock investing. To split up your funds is a really good idea. I've made that mistake so many different times, and it's always cost me. So make sure you're splitting up your funds. Even during the day itself, I would recommend like sometime in the beginning of the market, sometime in the afternoon, and sometime at the end of the market, if you can. And so that sort of thing. If you can do it twice. It doesn't matter, that sort of thing. But just as sort of an idea of whatever sort of thing. So take whatever amount of money you have, right? And if you want to do 2 weeks, you can do again like 1.5 weeks, whatever. If you want to do 2 weeks, just divide it by 10. Be like, here's that dollar amount. I'm going to put that dollar amount into this, right, over the next 2 weeks. That's what we would say. Because at this point, it could stop out here. It could consolidate, it could break up above, blah blah blah. We don't really quite know. But we're dealing with likelihoods here, just based off the knowledge that it has, and not just this time, but obviously before, right? It's gone on to history. So, anyways, just as sort of an idea. Okay. All right. Just as a quick note, just because I wanted to say this before too, there's a few YouTubers that I follow who have together. There's 4 of them. Collectively together, they have, I speculate, about over 100 years of experience in the stock market. Very knowledgeable people. And each and every single one of them is saying, 1, we are crashing. 2, we will have a short-term rally right now. We're overextended. We're looking at momentum indicators. There's stuff there that I could talk about your year off, but point is though, we're due for something of a short-term rally. And understanding that situation then, I would personally say, again, not a technical recommendation, but I would say that your best bet is to, also, yeah, fun fact, I'm just looking at this now, support line here, totally cool. You can see this channel here, and it maps up exactly. It's just like fun. Anyway, so, I would say though, sometime between the next 5 days and 10 business days, right, to split up your funds would probably be a pretty good idea. Before I start moving on to what I was talking about before about calls and reasons why we're not doing those things, before I do that, I want to show you what two of them have done, talking about these inverse ETFs. We can look at HIBS, and this has gone up approximately, I believe, 1.8 times over a 15% crash is just sort of like, you know, what we can look towards. And the other one that I would want to tell you about is LABD. Just looking at all of these, looking at the fact that we're in a tech-centered bubble, looking at what is like the most extended in terms of classically, when you look through history, classically, it has always been biotech, which has been the most speculative, We're in the largest tech-focused bubble that has ever existed. Biotech is absolutely something that is in a massive bubble, and the numbers support that. We have seen, I can show you, if you would want to go with LABD seems to be, just mathematically, seems to be maybe a little better than HIBS. But it's also, you know, diversification is sort of thing of a good idea. So all you need, if you are to invest in HIBS, all you would really need is just to look at the S&P 500 itself and look at the very top of it and say, hey, it's crashed 50%. It's been about 2.5 years. Over the next few months, I will start in equal amounts, start pulling out of this sort of market. And for LABD, the reference point that I would say to this is IBB, NASDAQ Biotech. This thing has crashed, and we can look to it fulfilling the same sort of thing. If it comes back up to here to 117, it's at 113 right now. We can see that this has crashed about 35% when you look at the last point there. 35%, and it has gone up 5 times since then. The NASDAQ, during the dot-com crash, again, tech focus here, crashed 83%. Yeah. Biotech is particularly speculative, right? So it goes into an even further unsubstantiated, you know, levels, that sort of thing. So this, we could say, conservatively speaking, 70%. Again, this is conservative. But if you want to say, let's look at 70% off of this, and I believe the numbers that I have down here are based off of like 80%. But you can do the math yourself. You just, 177.08 times 0.3, and you'll see what level it goes down to look for a 70% decline. And at around that time, also based off history, and we'll talk about this into particularly the future, but just to put a note this, like you saw earlier with the market breadth, things started crashing sooner than the S&P 500 did. Again, we call this a silent bear market, a silent exit out of the markets. This one crashed, it peaked earlier than the markets, we would say, at least in a sense, yeah. Because this was back in August of 2021. The markets seem to have peaked somewhere between November and January of this year. But anyways, so that kept in mind, the bottoming for this may very well be in, if it is to map onto history, may very well be in before the middle of 2023, and I have listed here September of 2023, instead of the S&P 500 bottoming in the middle of 2024. Anyways, and IBB again being that reference point. I'm glad I can't remember if I said this, but LABD, based off of a 35% decline, went up 5 times. So if we're seeing, and again, this has to do with the compounding nature of things. Just want to make sure, because last time it was so randomly. All right, still going, fantastic. What was I gonna say? Right, yeah. So based off of a 35% decline, it went up 5 times. Due to the compounding nature of these things, you may very well see, just as an idea, again, it's hard to have an accurate calculation of these things because it's based on a day-to-day movement. But we could see, if it comes back down to, I think this might come down to 45 if it meets or 50, yeah, probably about Yeah, probably about there. Not only just based off technical analysis, but also looking at IBB based off of movements. It's gone up like 3.5%. It comes back. Anyways, I'm just looking at different things, numbers. Regardless, though, if you get in at about 50, you might see this thing go to like 500 or something like that, or it might only go to 350. Yeah. Again, it's hard to exactly say what will happen, but just based off the fact that it's gone down 35% and not equal to 5 times, and due to the compounding nature of these things, that it goes faster and faster as time goes on, and so the percentage. So to put it like this, 3% of a movement, right, means a lot more for $100 than it does for 50. You see what I'm saying? So when we have a 3% down day in the markets and this thing go, by the way, weirdly enough, I know it says times 3. I've been looking at the NASDAQ, and this kind of makes sense too at the same time why this is like in particular, but this thing seems to go actually at a rate about 5 times. It says 3, but it's about 5 times. If you look at the NASDAQ, it's like, oh, the NASDAQ went down today by like 2%. This thing may very well go up like 10, 12 even. But anyways, so just to keep in mind, as an idea of how much money you could actually make, you might be able to make between HIBS and LABD, somewhere between, particularly if you have good timing involved in all this, but you may very well be able to make somewhere between 5 to 10 times your money, 6 to 7, 8 times maybe as well. Anyways, just try to narrow in. Anyways, well, it's just to say that. Again, the splitting up of between the next, and this is something that you'd have to decide for yourself, but somewhere between the next week, a week and a half, the 5 to 10 days, splitting up your money evenly multiple times throughout each individual day into HIBS and or LABD. I'm doing both. I'm doing a 50-50 split. Not really sure. HIBS is based off of the biggest movers, high beta. Anyways, though, that's just another note. So obviously, just to you, whatever you're more comfortable with. If you want to go with HIBS, it may bring you lower returns, but there's almost a sense of greater security because you can look back on history and know that the last couple that was most like this one went on for 2 years and 7 months to the day, and we could see something of a decline between 50 and 60%, that sort of thing. So that's up for you to decide, that sort of thing, just to put that out there. And I think that's it for this part, and then I'm going to go ahead and talk about calls. Oh, and then we're going to talk about short-term versus long-term capital gains taxes, why you don't want to sell before 1 year is up. And I'll talk about like what I mean by that as well.
So right back.
Yeah, totally. In fact, actually, I'm going to set up something, and I'm going to pause this, and then yeah. Wait for you to get it back. Okay. Hopefully that's fine. I didn't get the sign here that it's recording with the sound. All right, hold on a second. I'm gonna stop this.